How would you like to avoid the two financial mistakes most restaurants make by using two critical tools in their toolbox incorrectly? I'm going to share that with you in about 2 seconds. Hello, this is Dave Scott Peters with RestaurantExpert.com, and I'm all about budgeting. I'm all about making sure your restaurant has a chance to make money. I'm all about putting systems in place to help you make that money you deserve. I'm all about making sure you got it. But wait a second. All too often, I may put that effort in, or you may not be working with me and you're doing it all on your own and you think you're doing well, but you can't pay your bills. You look at your financials, your balance sheet, you look at your profit and loss statement, and everything there starts to indicate that you should be making money. Well, wait a second. What are two of the mistakes? Number one is I might be using my balance sheet at the end of the period, in this case we'll call it a calendar month, and look at my bank balance. Well, that's fine. That's your bank balance. It's your reconciled bank balance. But the fact of the matter is, days have gone by when you're looking at it. It's old information, and you may not have the money in the bank to pay your bills. A second problem is we look at the end of the month, or I say end of a period. It could be on 13-period accounting cycle, or a monthly, let's say, or 445 for that matter, but let's say calendar month. At the end of the month, I look at my profit and loss and go, man, I made money, that's awesome. Yet I can't pay my bills, I can't pay myself, I can't make payroll. Why? Because I ordered way too much product. It's on the shelves to be stolen, wasted, spoiled. I actually converted my cash from my bank account to product on the shelf. See, you can't use your balance sheet alone at a picture in time for where your cash is. You actually need to reconcile your bank balance on a daily basis if you're hurting for cash flow. You can't use your profit and loss statement for profits because profits are paying taxes, they don't pay your bills. You have in your profit and loss things like amortization, depreciation, and interest expense. What does that mean? Well, if I buy a piece of equipment and I paid $20,000 for it, but the government says you can't write that off over, say, a 10-year period of time, 5-year period of time, equal installments as an expense, even though the cash is out of my bank. I don't have the money, but I'll look more profitable each and every period. What if it's amortization? If you pay your insurance bill, the first payment is 2 months up front, and my last 2 payments are 0. Well, I may show in amortization an even 12-month installments on my profit and loss statement, but truth of the matter is 2 months were in the first month, no payments in the last 2. That can skew my cash. Well, what else? Interest expense. You may have a loan. And the way it goes is your balance sheet, when you make payment, your cash goes down, what you owe goes down, and there's a portion of that interest is an expense, but it's this really tiny piece, comparatively speaking. So you may show interest expense, call it $1,000, but you made a $10,000 payment. See, amortization, depreciation, interest expense are not cash flow related. So you have got to put together a budget based on your accrual expenses at the top, meaning labor and your cost of goods sold, but everything else needs to be based on payment or cash accounting. See, it's different. I'm not using my budget to pay taxes. I'm using it to manage my cash flow. So if you ever wondered why you look like you're profitable but you can't pay your bills, you're using the wrong number. This is David Scott Peters. Thanks for watching this video. Be sure and subscribe now to my YouTube channel. But before you go, download my free report. You'll find the link below in the description section. And be sure not to miss these other videos with expert tips to help you run your restaurant.